Good afternoon. I know everyone is filtering in, but if you're able to find a seat, we got a great program for you on blockchain, Bitcoin, and everything you need to know about it. So, as you come in, I'm going to bring up our panel. My name is Brian Sharp. I'm the commercial president. I have retail and industrial properties throughout Dade and Broward County. Our first panelist I'd like to bring up is Drew Hinkes. Matthew Markadu. And Liz Sturrock. Woo.
I always wear the socks. You gotta wear the socks.
So,
I get them.
First off, I want to basically say thank you to everyone for attending, and I want to let them give a self-introduction. They can best explain who they are. And Liz, if you don't mind leading us off, let everyone know what it is you do.
Sure. My name's Liz Sturrock. I'm the Vice President of Information Technology for the National Association of Realtors. I've been with NAR for 10 years now, and we take care of all of NAR's proprietary e-commerce, national database, and then all the internal IT for our organization.
Hi, I'm Matthew Markadu. I'm the CEO and founder of NoosLab, a collaborative platform for supply chain industry, and also the executive director for the Florida Blockchain Foundation, recently created.
Good afternoon, everyone. My name's Andrew Hinkes. I'm a co-founder and the general counsel of Athena Blockchain. Athena Blockchain is an investment bank that assists people who want to raise funds to structure and place securities, including tokenized securities. In my spare time, because who only has one job these days, I'm also an adjunct law professor at the New York University School of Law, where I teach a class called Digital Currencies, Blockchains, and the Future of the Financial Services Industry.
So my goal here is for you to get a better understanding, or a start of an understanding, why you need to know about this technology, whether it be for an electronic currency, just for blockchain's purposes, and what the difference is. Some of you may have no idea what one has to do with the other, that Bitcoin is built on a blockchain. So we have these experts here to kind of give you some insight. And because we are a real estate group here, I want to lead off. There's a property in New York that basically has been developed. It's a condo. It's got 30 units, and it was monetized on a blockchain. So basically, you're purchasing the building by buying into the blockchain. So Liz, if you don't mind leading off, give us a little bit of your opinion on where this is, how it's taking off and what you see going on with it.
Yeah, so the company that's doing this is really interesting. It's a company called ConsenSys, which is basically bringing blockchain to all different industries, whether it's medical, logistics, or real estate. And so the group that's doing that is called Meridio. Their head of development is actually a former NAR employee named Dave Conroy. He's a really, really bright, great guy, and he's been working with his technology really since about 2010. It's really a glorified REIT, but they're able to monetize things very, very quickly. They're being very strategic about the properties they're allowing into this right now, but they're able to do it with such low costs that people will be able to look to using this Ethereum blockchain technology to get money out of their homes for a lot less than it would have cost to get a home equity line of credit.
Okay, Drew, why should we care about blockchain? What is the benefit to us?
So the word blockchain has been sort of abused by marketers, and it's really hard to understand what anybody means when they say a blockchain, because it can mean a blockchain that it has proof of work, meaning that there's a public network of people supporting it, and it provides you with this tamper resistance feature. But it can also mean a private database where people give permission to others to go onto the database and share information. So I don't really like the term blockchain necessarily, but because it's over-inclusive, but there is a genre of technology that allows people to share information and to identify what level of access to information the various participants have. Meaning, can they see only their information, other people's information? Can they write new information in or not. And the promise of this sort of idea of this technology is that people will be able to have the ability to add records to a database that cannot be overwritten without it being obvious. So you have sort of trust in the information. And it can be done in a way that allows parties to create new value. The idea of the tokenized REIT that was just discussed is that people can have better transparency as to ownership, you can have faster settlement and clearance of the asset as it trades, and all these benefits would then drive demand for these instruments because they're going to eventually be traded on platforms that will allow marketing. You can open up international markets and start to advertise REIT interests in US real estate around the world.
Now, it's new. I mean, it's only been around a short while. Should we trust this? I know you're wearing the Bitcoin socks, so you're promoting that currency. But is it a fad? Is it going to stick around? Digital currencies get created every day, and they come and they go, and a few percentage stay around, and people decide to invest in them. Should we trust this, Matteo?
Yeah, hi everyone. It's important to understand that the blockchain is only a part of the digital transformation that is ongoing right now. It's called the fourth industrial revolution. After the steam, the electricity, the computers, now we're going through a digital transformation of the economy, and this is where it impacts all of us and all our companies. And as individuals as well, we have to ask ourselves the question, what do we do with this technology? So the blockchain is only one component, and it's the component that glues all the data that will go through these technologies. It brings trust, and it's a ledger that allows to encrypt information in a way that is immutable. So therefore, you can trust the information that you are getting. And this is priceless in business because the cost of insurance and all the risk that goes with a transaction can be lowered by this form of encryption. So now the technicality of the blockchain, I think, and that's why it's getting time to get into the mainstream, because it's a very techy, explanation. It's a digital ledger where you have proof of work, proof of stakes. Nobody can understand really what it is. What you have to understand is that you can trust the data, and this is important for your business to go on these platforms.
Quick question. You mentioned that you can trust it. How? Why? Is it hosted on one computer? Is it shared? Can you give a little insight into
Sure. So from a structural perspective, one of the things that makes blockchains generally different is that they don't simply sit on a server in one place that somebody's administrating and making sure still communicates appropriately when you ask it for information, like most things on the web. Instead, it's a decentralized system that contains a copy of the record that all the parties are sharing. And then not only do they share in the maintenance of it, meaning that they all have a copy, but they all undertake a task of updating it in a synchronized manner. And so when you have a certain type of blockchain that does this, you can have a higher level of trust that the records being added are legitimate and authentic and not doctored or tampered with in some way. Brian's original question was, should you trust a blockchain? My answer, which is a controversial one, is that you should trust a blockchain if you trust the people that are designing it, maintaining it, operating it, and coding it.
Yeah.
You are delegating your trust, which we otherwise have all sorts of governance and all sorts of other ways to verify the trust of people, like professional licensure, insurance policies, and all the rest. You're delegating that to code. And instead of people who can be sued or held accountable criminally, now you have code. So the question is, how much do you trust the people writing the code? Do you have any recourse against the people writing the code? There are a lot of people who blindly have faith that blockchain, whatever that is going to save them from some sort of business problem. My statement, like I said, might be a little controversial, but it's, do you trust the people who are backing it, designing it, maintaining it, and operating it? Because if you do, then you're all set. And if you don't, maybe you've just sort of relocated an old problem to a new place.
Well, you're saying, do you trust it? Who's the person behind it? There's foreign countries now, other countries that are creating their own currencies on a blockchain. They're using that. Do we trust that?
So Venezuela did this thing called El Petro, which I don't know if there's anybody from Venezuela here, anybody from the Venezuelan government here by chance, but my personal opinion is that no one will ever see or have an El Petro instrument. I believe that this was a PR stunt by the government in order to gather some sort of attention. And it's also been used as a way to control the Venezuelan people by forcing them to undertake certain activities only denominated in the petro, such as getting a passport. But no one's ever seen a petro, and you can't get a petro. The petro was supposed to be novel and different because it was backed by the oil reserves of the Venezuelan government. However, show of hands, who else knows what's backed by the oil reserves of the Venezuelan government? Anybody? The Bolivar. So what have we really done by making a central bank issued crypto asset? If it's backed by the same thing, fully controlled by the government, and no one has gotten one yet. To me, it seems like a big press release with nothing behind it.
So who's going to be using it? Liz, for NAR, do you see particular companies using it? Are real estate offices coming on board, or is the association embracing it?
So, for day-to-day, blockchain is great because it's immutable and because you can trust the data because of the consensus system. But it's really hard to work with right now for average programming, and it's not very fast. So the MLS is not going to move everything to blockchain. It's great for cold storage of data, but for quick, responsive web API type stuff, a traditional database still makes the most sense.
Anyone else have any opinion?
Yeah, it's important to differentiate the cryptocurrencies and the blockchain. The blockchain is the technology behind the cryptocurrency. It's the way to encrypt the data. The cryptocurrency are the fuel. It's the thing you use to make the transaction happen. And it's also an instrument that can be held by the investor and can be used as a utility or as a security. So this is where Drew comes in place, where he can give the proper advice to investor, and also the role of Florida Blockchain Foundation is to promote friendly legislation for investors and for users of cryptocurrency. But it's important to differentiate blockchain, which is the technology, the ledger, and the cryptocurrency. That's why there is a misinformation. Sometimes people misunderstood Bitcoin because they think it's Bitcoin and blockchain is the same. No. Bitcoin uses blockchain. It's not blockchain.
So the Bitcoin system was launched on 1909. And Bitcoin created a data structure that's what we generally start off when we think about a blockchain. And the purpose of the blockchain was to track transfers of Bitcoin from one participant to another participant on the system. People have said, let's ignore the Bitcoin part, the payload, the thing that's being moved back and forth. And instead, let's use that piece of information that gets passed and can be passed in a way that's easy to track and hard to fake. Instead of putting a Bitcoin, which the market has recognized today has a value of about $6,500 US, let's put a piece of information that stands for something else. Let's put in a piece of information that stands for a fractional ownership share in a piece of real estate. Let's put in a piece of information that stands for an ownership interest in a company. Let's put in a piece of information that stands for the position of a tanker filled with fuel as it crosses the Pacific. And so people are taking this tool, this framework that was created by Bitcoin, taking the instrument of value, the little Bitcoin thing, the symbol that people trade out, and instead use it to track ownership or track provenance of a variety of different pieces of information, one of which we started talking about was a fractional ownership of a real estate project through a US tax structure called a REIT.
Yeah. An example also in the supply chain to trace provenance of a product. For example, you take how is it going to affect your daily life? If you take a vegetable, for example, you will be able to trace when the seed has been planted, when it has been harvested, did it receive pesticides, how long has it taken to come to your store, how long has it been on shelf, and how long can you have to consume the product. This product most probably will be less expensive than the other product that is not transparent, because the blockchain eliminates a lot of the supply chain friction that you have by verifying the information. Sometimes you have more than 200 documents to verify during a transaction between countries. The blockchain, by having a single source of information, eliminates a lot of time that you spend looking for things. So for instance, I give you the example of vegetables. There was a test done with the mangoes coming from Africa with Merckx, the shipping giant. It took them 7 seconds to locate the shipments, whereas sometimes up to 2 weeks when they have to call and see where exactly the mangoes were. So this is how it's going to impact our daily life, for example.
So you're mentioning of using it for tracking. Is there, being as we're in a room full of people interested in real estate, who do we see embracing this technology first in this industry? Would it be banking? Would it be property appraiser offices, cities, counties?
I think counties and title is where it starts to really make sense. And I believe, is it Venezuela, I think? They've put their whole property, they're moving all of that to it because that is something that you really want to be immutable. And it's a cold storage, data storage situation. You don't want fraud happening with property transfers. And that's going to make the title industry, I think, going to be the next step into that. And they are already investigating it and looking at it, and Alt has done a lot of research on that, the American Land Title Association.
Yeah. Everything that you can quantify, you can encrypt on the blockchain. Temperature, price, GPS location, an agreement between people, you can quantify it, therefore you can encrypt it on the blockchain. There is no notion of qualification by someone. So for real estate, you're going to have your title. If you are sure of the title, then the insurance of the title is a problem that goes away. It's also to transact within rentals or buying a property, you will do it through the blockchain. It can also fraction the ownership because you can buy a little piece of ownership through blockchain. You see other use. Maybe for also the MLS, it's interesting to have one single source of information about the property, because if you have different description on the internet of a property, which one is the good one? So with blockchain, you are sure that the description you have, it's been confirmed by the network, that is the right description. If you want to make a change, it has to be confirmed by the network as well. And if it's translated in a certain language, you make sure that this translation is the right translation because it's been encrypted on the blockchain.
So should I convert my office, my real estate office, onto blockchain? You know, do I want to keep track of everything that way? Has my building depreciated? Would that be a wise decision? I mean, I trust myself, but who's to say someone else is going to trust my numbers in my blockchain?
So typically when a company decides that it wants to reorganize its information, it'll find a consultant or two that will help them to understand what sort of technology makes most sense. Most of us here have probably heard of SAP or Oracle. They do rather large database installs for big companies, and they do things like tracking inventory in large manufacturing ventures, things of that nature. For a business like real estate, it seems as though taking your office, if you have a brokerage business, for instance, and converting it into a blockchain doesn't really seem to make a lot of sense. Your lifeblood is being paid friction involved in buying and selling real estate and or the administrative functions of collecting rents and dealing with leased property. For those purposes, you would get a benefit from a blockchain if any of your banking institutions wanted you to interact with them that way. Mm-hmm. But for now, banks are still pretty comfortable using things like wires and you paying them to get checks issued by them. We haven't gotten to a point yet where merchant banks that face their clients are necessarily abandoning their existing way of life altogether. You asked the question originally, which is, where is this going to get adopted first? The banks have seen this as a threat for about the last 3 years, and they have been working to sort of use the technology internal to their processes so that they don't lose their position and so that they can benefit from the efficiencies, make more money for themselves, and perhaps pass along a very incremental piece of the cost savings to their customers. As far as where this is going to hit in real estate, we've already seen in the US the beginnings of REITs that are being done by a tokenized raise and a tokenized instrument rather than a paper instrument or an instrument that's traded in an electronic form but not on a blockchain. Why would you want to have a tokenized real estate instrument instead of a piece of paper that lives in a lawyer's drawer or a digital, say, signed PDF? Well, the shortest, clearest answer I can give you is that there are platforms that will be created that will allow for secondary trading, and there will be international marketing. The consequence of this is that there could be an analyst sitting in Jakarta who is the world's foremost authority on mid-cap shopping mall REITs and talks about how and why a particular developer's shopping malls or parking garages are a better investment than another competitor that operates primarily in Southeast Asia. We're looking at globalizing the private placement markets, which are $7.7 trillion. So the promise is better advertising, a larger group of prospective purchasers, and an easier way of selling full and partial ownership shares of real estate through this tokenization process.
So with this New York property that we were discussing earlier that has been tokenized, who cares? Like, is it somebody in the US that wants to buy into this condo? Is it someone from internationally that wants to put their money into it? What risks are there and who does it appeal to?
So maybe somebody doesn't want to buy the $500 million building, but maybe they'd be okay owning 5 or 10% of the $500 million building. So if you do a REIT out of these assets, you have the ability for a number of investors to buy partial shares. If you have these platforms that exist, you have more liquid exchange, and thus you have price discovery. Price discovery allows the markets to work more efficiently and allows us to realize our profits on these assets in a more effective and more true to the market way. There are a bunch of other projects that seek to use blockchain technology to take some efficiency, to add some efficiency into real estate transactions. There's a company called Chromaway that works extensively with the Swedish government to allow for the defrictioning or the taking out of the delays in expense in real estate transactions by automatically updating people when certain events occur. The escrow goes hard. The inspection is turned in. The insurance company signs off on it. Instead of waiting for paper to move, which we all know means paper to get lost, we can now have automatic updates, and we can have a definitive record of when something occurred within that blockchain. So you can use it to eke out efficiencies from time and cost, or you can use it in a more sort of aggressive way or a more sort of looking to the future way to take these otherwise sort of illiquid assets and break them up in a way that's compliant with US law and allow them to be traded. In Europe, anybody here in Europe? Anyone from Europe? In Europe, the laws are considerably more generous as to what you can and can't do with respect to tokenizing real estate. I know of a project called BrickBlocks that's doing a tremendous amount of work out there. Unfortunately, the US equally balances its desire to protect consumers with facilitating capital formation. So we're still kind of working through with the regulators how to strike that proper balance.
You bring up a good point there, though. We don't have to deal with just the United States and the laws created here. What do we have to fear? What's already in place? We have to deal with foreign countries. So it becomes more of a universal currency or document, whichever way you want to do it. Like, how do you see us interacting, and what pitfalls do we have to look out for?
So this is actually something that NAR is working on with regards to this is legislation. So we started looking at legislation around the country. 12 states have legislation already on the books regarding blockchain. And what we saw was that there were a lot of different definitions for things that we're discussing here and how they're being interpreted. So what NAR has started to do is to partner with our government affairs directors around the country to just get unified language on the books. Not so much how it's going to be used or what people can use it for. We just want everybody to speak the same language. So a smart contract is a smart contract wherever you go.
Yeah.
Right, and in addition to that, Congress has, or 2 congressmen have offered up the Blockchain Promotion Act of 2018, which seeks to appoint a multidisciplinary panel of legislators and people in technology to come up with a definition of blockchain, of which we just heard there are 12 different state definitions and a separate definition from the National Institute of Standards and Technology.
Aside from international definitions of it as well.
And then you've got a number of countries like Malta, like Switzerland, like Singapore that have their own definitions and that have, in certain cases, wildly different legal structures around these assets.
Maybe you can differentiate public blockchain and private blockchains because there are different blockchains being built all over the world. And the question of the integration of this blockchain altogether is going to be one of the big challenges.
So Mathieu brings up a really good point, which is there are public network blockchains. These are materially different than private blockchains. Public network blockchains are blockchains that any person, by running software on an internet-enabled computer plugged into the wall, drawing current, can participate in. They do not have typically an identifiable group that controls any aspect of its operations. Code decides under what circumstances a transaction of value is acceptable and will be added to the blockchain or not. They decide the feature set, and very importantly, it sets up incentives so that the people who are confirming that new transactions are acceptable and appropriate are being paid by the system. That way, you have a reason to do this verification process, which is resource intensive, and the people that are supporting the network are getting the asset, and they have an incentive to monetize the asset by either selling it to other people or developing products and services that work with that network. But these networks don't require anybody's permission to participate in, and they, generally speaking, are pretty heavily decentralized. There isn't a server. There's going to be a worldwide network of servers. Private blockchains, depending on how they're configured, can be totally indistinguishable from a 1971 relational database, or they can be decentralized, but with a central actor that can rewrite the records when they want to. Or they can be held on one or two computers and therefore be much more centralized. It really comes down to, sorry?
Goes back to who you trust?
It goes down to the governance, or the way that the people, the way that any given group of people are interacting on the system. Public means anybody can join, typically very decentralized. Private means there's somebody who you need to get permission from, and there's generally somebody who can kick you out, reverse a record, or otherwise act as the central controller of that system.
For instance, here, if we would like to make a private network of blockchain, we could, and acknowledge that I would sell you my phone today. We'll get the consensus to acknowledge that, and we will design people to gather the vote or the opinion on everyone here, and that will form a block. And that way we can confirm, all of us, that Drew bought my phone for $200 today at this specific time, and the information will be sitting in each one computer, encrypted.
And how it works then is if one of the pieces of the consensus network says that instead of that price, it was actually $150, that would be a change in the data, and so the hash fingerprints between the blocks that form the data would be a mismatch.
Yes.
And when we went to go back to the consensus, the other members of the network would say, hey, you have a mismatch, and would vote me off the network. So it's really just a technical game of Survivor.
Yeah.
Right, so everybody agrees as to the history of transactions. And if somebody decides to cheat and change one from the past, it causes a ripple effect, and it throws everybody out of their sort of synchronicity. And because the network is designed to disregard that and to continue on.
And then what I can do is if I get caught and I say, oh, it was just a mistake, I can basically dump my database and repopulate it from the rest of the consensus network and start over again.
There is a big change in the mindset with the blockchain, is that it comes with a reward. The token system comes from the gaming industry, where you get given some tokens to play a game. The more you perform, the more you are rewarded. And blockchain does that as it rewards the good behavior of participants. The participants are entitled in sort of with the network. So the more the network is efficient, the faster it is, and the more efficient it is, the higher the value of that token. So you get a sense of ownership of the infrastructure.
So, but it's another pitfall of blockchain, is because not only is the data immutable, so nothing is ever deleted, so it's additive, but then it's also multiplied, right? Because you have this consensus model. So the more participants that you have, the data is going to continue to grow and grow and grow. And disk is cheap, but it's not free. Yeah. And so there is going to be significant cost as these data sets continue to grow.
That's why Bitcoin is consuming as much energy as a country like Iceland, I heard.
Yep.
So because every time you make a transaction, you need all the network to verify this transaction. So that's why they came up with different sort of consensus voting. Instead of having the whole network vote, then you decide there's a specific group of stakeholders in that transaction who will vote. And that way you consume less power. So there will be, that's why the technicality of it, I think, is not very important. It's like when my friend Alexander Lopatin uses a metaphor that I like. He said, when you take a plane, you want to go to point A to point B, you don't necessarily need to know the science about why you're flying, right? So what you want to know with blockchain is that it's immutable, it's secure, you have to choose the right compliant network and make sure you're protected and you get into the right network. But I think everyone will use a blockchain in the coming years, without even knowing it.
You mentioned, though, how everyone is synchronized together. Now, I remember years ago, there was one company, they just basically shut off their system, and basically all the value in it disappeared overnight. What's the fear in that? Well, everyone does have the same files, and they're all following along the same way. What risk do you have of losing everything? Because the way the system works is everyone gives it value, but if everyone leaves it, it has no value, correct? So
the price of any of these network traded assets is the price at which somebody last traded it. Everybody goes down the wormhole of what is money. We all have money in our pockets that are issued to us by governments. We acknowledge that these have value because the government forces every merchant within its jurisdiction to accept it as though it has value. And those merchants can store that value in banks, and those merchants can get other things that they need, whether it's the ability to fill their tanks with gas, the ability to restock their assets that they sell, the ability to get services like paint their house. We all agree, and we all work under a system where the greenback in my pocket is $1, and everybody acknowledges that it's $1, and we all transact as if it's $1. There is no reason that we all couldn't also decide that the digital asset being tracked on the blockchain is also the thing that we're going to treat as money. Right now, there are two really big things keeping that from happening. First, these assets are very difficult to work with in real life. I use the Susan Hinkes test. That's my mom. Brian's laughing because we grew up together, and he knows my mom. If my mom can't figure out how to use it, it's too complicated for everybody generally to be able to use. And the second thing is that the US government and globally governments may not want to give up on this thing called seigniorage. Seigniorage is an economic concept which suggests that it costs the government less than $1 to issue $1. So every time that $1 is put out in the market, the government makes some money. And governments don't like to give up their ability to make money or collect money in the way of taxes. So it's not as though incumbents like the government are just going to step aside because we have a little bit of cooler technology. That'll be a war that will be fought. I'm not sure how it's going to go. But I think the big point is that these assets are what the market makes of them. And so one thing that Brian's question alluded to was what happens if everybody just stops using Bitcoin one day and there are barely any people mining it? What's that going to do to the value of this instrument? I'm not an economist. I'm not giving financial advice. I am a lawyer, so I say things like that. But ultimately, if there's not that much in the way of demand, values are probably going to go down.
For Bitcoin, yeah.
Right, for these publicly traded network assets. When we talk about a fractional interest in a real estate project, it's a completely different animal. At least in the United States, they are going to be treated like securities, which means that they're going to have to be handled like every other equity or every other, in the case of a REIT, like a mutual fund. You're going to need to buy and sell them through brokers, which adds some friction. And just because you put it on a blockchain and just because your blockchain purports to give you certain additional functionality doesn't mean that it's not still going to trade through a platform and using brokers that can stay in compliance with US law. I wouldn't want to be the person who owns a REIT or a building that is being traded in a way that violates federal law.
Yeah. Also, you have the question of what is it backed by? When you take a Bitcoin, for example, I used to be a stockbroker in the end of the 90s, where you had the dot-coms, and it reminded me this joke that we had about the dot-coms and the IPOs, where you had these guys selling to each other the same box of sardines until it reached $1 million. And at some point, one guy didn't want to buy it. So that the value goes to the value of the box of sardines. Pretty much that's what Bitcoin is doing by selling the same thing to fractional people all the time until it reaches a certain point. But what's behind it? That's a question you need to ask when you buy a token. Preferably, it has to be backed by either the network or something.
We all know that it made the news sometimes, when somebody purchases a condo or a home with Bitcoin. Liz, I know you mentioned before when we were speaking that for putting money in escrow for a contract, probably not a good idea because the volatility of it. Can you give a little more detail on that?
Sure. So, average escrow in the US is about 90 days, so about 3 months. Well, in two separate 90-day periods in 2017, the US dollar fluctuated less than 1% up or down, and Bitcoin either went up 100% or went down 64%. That is a huge amount of risk. And who absorbs that? The buyer, the seller, would you as an agent absorb that as part of your commission? So I think that, if you want to start to do those types of transactions, one, they have to be all cash transactions. And two, everybody needs to be in agreement and everybody needs a decent lawyer. And three, I think that you just have to figure out how to do things a little bit more quickly because time is not anybody's friend when it comes to the value of Bitcoin.
So interestingly, Bitcoin's value has been more stable than Apple stock over the last 4 months, which is admittedly a rarity in this industry, which has typically been one of hyper volatility for reasons that probably have more to do with market manipulation than anything else. Bitcoin's price has been relatively stable, even compared to certain national currencies like Venezuela, Argentina, and a couple other places. So we're all still trying to figure out the economics underlying these assets. They don't trade on regulated markets, so they are not protected from manipulation and from tactics like wash trading, which we got rid of in the normal financial markets in the 1930s.
Yeah, the lack of metrics is a problem because those are pretty new. So before we can say, okay, this is what it brings to my company, it takes a year, 2 years. We get a lot of pilots. A company like Walmart, for example, has 10 ongoing pilots on the blockchain. So until these come out, but when they come out, I'm pretty sure that a lot of people are going to follow. So everyone needs to read about it, be informed, join the Florida Blockchain Foundation. We give you information and follow Drew and Liz with the information you really need to be aware of what's happening.
Great. Just wanted to open it up to the floor if anyone had any questions. We have a little bit of time. Yes, right up front.
You talked a lot about Bitcoin, but I understand that there are more than 700 cryptocurrency.
About 7,000.
7,000? Okay.
Yeah.
Can you tell us a little bit about other ones?
Each one.
No, no, each one, but one of the top ones.
Sure. So I'll talk about them in sort of buckets. Bitcoin was the first one, and for about the next 3-4 years, there were a variety of other copycats that may have altered slightly what Bitcoin does, but essentially it was just another way of sending an increment of value from a person to a person. Then we moved into a bunch of technologies that added on to this ability to track transaction, the ability to actually execute code that dictates when a transfer occurs. This was named by a guy named Nick Szabo a smart contract. The idea that Brian and I could bet on the Dolphins game, and if the Dolphins win, the system knows to pay him, not me, out on our bet. With the ability to embed smart contracts, you have a whole bunch of software systems that can be built with the ability to transact value automatically as the result of how that software runs. We've had a couple other really interesting projects seeking to use this technology to do things that typically are done in the financial services area. There are some projects like Augur and Gnosis, which are essentially commodities futures markets. There have been some really interesting projects that seek to emulate trading like we see in the conventional markets. And then there's an entire separate taxonomy, which are those that are trying to use the private blockchains to replace virtually every business process that involves sharing or collecting data.
And what percentage of those are actually usable and feasible?
Right now,
Yeah.
less than 1%. Most of them are, you fund me, you get the token. When I build the system in the future, you can access a good or service or product from the system with the token. So they're more like investments.
I hear the Fed is trying to get a Bitcoin too. No, a Bitcoin.
So the question is, isn't the Fed going to issue a coin? There are a bunch of reasons they might want to. Seniorage, like we talked about, the ability to track every single American's business transactions, where they happened, who they transacted with, and for what. The government probably loves this. Most of us in the room probably think it's scary.
You can
I think
we have time for, like, one more.
in their stable coins.
Right up here in front.
Too much.
Yes.
Okay, sorry. I have a quick question regarding security. So if I were to buy Bitcoin, and we know happened before, that some of them disappeared, who is responsible for it, how that works?
You.
So if I invest in Bitcoin and then one day I'll wake up and say, no Bitcoin, what did I do wrong? How you can guarantee that we have a security for the currency, cryptocurrencies?
Sure. So if cryptocurrencies are, from a technical standpoint, bearer instruments, you have a password called a private key. If you lose the password, if somebody else gets your password, you can lose control of your asset. And the only recourse you have is to ask nicely, hit the other person with a pipe in the head, or try to sue them. We like a lot of things that are sought to be replaced by crypto. We just don't know it yet. Like, we like the idea of virtually free transactions, but almost all of us like to be able to do a chargeback on a credit card, or to be able to return something and get their money back if, like, the shirt doesn't fit, without having to open up a lawsuit or threaten somebody with bodily harm. So you can eke out efficiencies using these products, but we may not actually like the world that we get when we do this. Your question specifically was about, what if you lose your password to your Bitcoin? What's your recourse? Well, there isn't a Bitcoin company that you can call or send a letter to somebody in customer service to try to get your Bitcoin back. If you send it to an address that doesn't exist, it's gone. If I send it to Brian and then I decided, oops, I didn't want to do that transaction with Brian, he either needs to be nice and give it back, or I have to sue him, or maybe try to rough him up. There are people that use software in order to hold these assets, like exchanges. Some of the exchanges will disclaim any sort of existence at all. Some of them have customer service, and you can actually make a phone call and maybe get some help. But this is something that we haven't had since the 1970s, which are fundamentally bearer instruments. And a lot of people, if we move over to this sort of world, will be very, very unhappy to have lost all that customer service that they really enjoyed.
True. I want to basically try to wrap everything up. If anyone had anything else they wanted to mention, well, I want to thank our panel and thank you all for listening, and hope you learned something today.